Oh, I can't wait.
So
I can talk about this all day.
So I'm just interested to know, how is this happening in a government that is so strict on the funding? Or have welcome back to the Hustle, Stack, Invest, Repeat podcast, where we focus on generational wealth and also financial literacy. Today we have the opportunity and the honor to speak with
Charles Kiyataba.
All right, financial advisor, financial lender extraordinaire. So let's get right to it, man. Again, super excited to have you. We've waited a long time to get you on this chair and sit with you. Something that when we kind of formulated this Hustle, Stack, Invest, Repeat podcast, you were one of the first names that kind of came up on our radar. Dale was I'm telling you, he was like, yo, listen, my man Charles, I'm telling you, this is the guy. This is the guy. He's the quiet, the secrets gem, the city's gem. But we'll put him out, on the map right now.
No, man. First of all, I appreciate Dale for always, mentioning my name in rooms I'm not a part of. So that's the first and foremost, right? And yeah, I'm excited. I'm excited that to hopefully share some knowledge, and people who are listening and tuning in right now can at least pick up a few things to implement. But yeah, man, congrats to you guys as well, right? For taking this, grabbing it by the horns and moving along with it. It's a big step, and I'm excited to see where this thing goes.
Dope, man, dope. So when you think about financial lending, right? People may not know what that kind of looks like. Kind of walk us through what that looks like, what you actually cover, service that you provide. Kind of give us like a high level overview of that your field.
Yeah, for sure. So I would be, my license technically would be a mortgage agent level 2 in Canada. In America, you'd be called like a loan officer, more or less. So I lend against anything real estate backed. That's where my foundation, that's where my fundamentals come from. So anything real estate related, first time home buyers, investors. So I have my own brokerage out in Mississauga, so the west end of the city, called the Money Mint. And now I've niched down over the last 2 years to solely focus on business owners. So people who want to buy businesses, operating capital and things like that is kind of where I've segmented my business now. So anything really real estate or business related, I'd be able to provide lending against those two assets.
Okay. No, so if you kind of are following what Charles just said, so when you think about that, now it's just shifted, over into the business aspect.
Correct.
So when I think about it, like franchises,
yes,
the people that get into franchises, I'm saying like that, that this is who you need to reach out to, because you need somebody that's very knowledgeable and educated in that process that's going to steer you and be able to close those deals for you, right?
100%.
We all think about, franchises and getting into it because we're like, man, that's a sure business. That's guaranteed money. The branding is there. The marketing is there. I just need to get my name, or I need to sign my name on that dotted line beside that. And that's where, you come into play, correct?
1,000%.
Man,
1,000%.
So I know you mentioned, a lot of times what we see on really in social media, we see a lot of narrative through the American perspective. We're just kind of, joking a little bit in regards to my guy. Big shout out to him, MG, the mortgage guy. Right? This is like, this is Charles, our MG, the mortgage guy. You know what I'm saying? The Canadian version. Because again, you got to understand, like, we are very much inundated by a lot of social media, period. Right? So a lot of times the information that's out there is relevant, but how does that really apply to us on this side of the border, right? So even when we talk about credit, we talk about just overall what that government do's and don'ts look like. It's so vastly different on American side and the Canadian side.
For sure.
So having somebody that can speak to what you want to accomplish on the Canadian side, if that's where your outlet is and that's what you're trying to tap into, that's exactly what you provide, correct?
Yes, sir. Yes, sir.
All right, cool, man.
Yeah, no, that's dope. So I guess getting right into it, like maybe so people even get a better understanding. So like that example you said, a franchise. I kind of started talking with Charles because same thing you said, all the information was in the US. I wanted to figure out everybody says one of the pillars of wealth is business. I'm always like, so how do you do this? How do you buy a business that's $1 million, whatever the case may be? And then I just saw him one day mention, he's like, that's what I do. So for people out there, like say they're looking and they're like, oh, I'd like to get a Domino's or a KFC or stuff like that. Like, how does that process work? Is this something that's just for the wealthier? Is there people that, is there a way to, you know, the regular everyday person to be able to get into this type of stuff?
No, 1,000%. I think before you even approach, let's say you want to buy a business, there's a few things I think I should dispel like right up front, right? That's extremely different between Canada and America. First things first, we have to understand America has over, I believe, 5,000 FDIC approved insured banks. Canada, we have less than 1,000. All right. Sorry, less than 500, excuse me. I'm willing to bet out of everyone in this room, you know, everyone who's recording, obviously us on the podcast, we probably all bank with the same 5 banks.
Right.
TD, CIBC, Scotia, RBC, Bank of Montreal. They dominate the marketplace. In America, that's very hard to do, right? Because they have so many different banks. All of Canada's population fits in New York State. New York State is actually bigger than Canada, population-wise.
Yeah.
So our lending criteria right there, commercially, we can't even compare. America's a completely different beast, right? So when you see the commercials and the advertising, 0% down financing, 0% down, buy a business with no money out of pocket. That doesn't apply to Canada, I'm sorry. It'll never happen, right? Canada, we are extremely conservative when it comes to lending. We're commercially very conservative, hence why during the 2008 recession, the only banks internationally that didn't crash were the Canadian banks. We stay strong because we don't lend like the Americans do. All right, so I think that's the first thing. Now, on the micro, when you want to buy a franchise, a lot of different parts come into it. I would say for the average individual getting in, unless you have liquidity, net worth, starting your own will probably be the cheaper route, right? And that's, you don't need to show revenue, all right? So there is a loan program out there, and I'll get into the details, called the Canadian Small Business Financing Program, where against a business, you can qualify for up to $500,000, all right? Now that's tied to 2 things. There's no revenue, right? Equipment and leasehold improvement. So let's say, for example, we want to open up a Jamaican restaurant, right? We find a lease, all right? It's going to run us up, call it $3,000 a month. We have our GC that comes in, and he says, hey, to do the build out of this space, it's going to cost us $100,000, right? And then we look at all the equipment that needs to go in, you know, maybe commercial grade oven, commercial grade freezer. That's going to cost us another $100,000. So all in $200,000, right? Plus maybe we need about $50,000 for working capital just to get the business off the ground. A bank will come in and look at the industry you're in. So in this case, we're in hospitality. Hospitality took a hit over COVID. A bank will say, hey, do you know what? You know, you guys have strong background, strong resumes. You come from the hospitality business. It makes sense that you're jumping in and starting your own restaurant because let's say you're a busser or a waiter or a manager in your past. We'll give you 70% loan to cost of your invoices and equipment. So out of $200,000, they'll give you 70% of that in a loan, right? And then we'll maybe give you an extra, let's say $30,000, $40,000, $50,000 in working capital to start. So now you're only coming up with 30% plus HST out of pocket. It's not bad, right? Okay. But you'll never get 0% financing. 100% financing where you do nothing, right? Take number 2, understand that whenever you're getting a business loan, there's no collateral. So it's not like when you're buying a house, right? And the bank puts a mortgage on your house. If you don't pay the mortgage, what are they going after?
House.
The house. If you default on a business loan, the bank has no recourse. Other than the business shutting down, there's a personal guarantee maybe, right? But how do they recoup their funds? They don't. It's a wash off their books. So everything else in the background, it needs to be proper. Credit. Does he have a little bit of liquidity, a little bit of net worth? Does he own a property? Not because they want to put a lien on it. They just want to know that you're not, some dude walking off the street and we're giving you $200,000, $300,000 Because again, how do you recourse that? I mean, how do you bring that back? And then unfortunately over COVID, what a lot of people were doing, they were taking these loans and then going to Dubai. Going to Dubai, going back home, but West Africa, India, right? And the bank's like, what the heck? What do we do? Right? So now what they started doing was implementing site visits. So after they give you the loan, they're actually going to go now send a representative out there to see if there's actually a business that's operating, right? So,
wow, I didn't know any of that. Like that's some good information right there.
No, not only great information, but I think it's very important to understand that Canada and America are very uniquely different.
Correct.
Yes, we share a very small space, if you want to say that, a border here that separates us.
Right.
But when you think about what you mentioned is very important, because I've had the opportunity to be on both sides of the border, so I exactly understand.
Yeah.
When you think about the FDIC, insured banks,
Correct.
right? We have, like you said, we have 5 banks here that really dominate the whole market, right? Where it's not the same in America, where you can go state by state and find 10, 15 different banks that would be able to fund you.
Correct.
Right? And again, there's prime and then you have subprime banks, right? And they're everywhere.
Yeah.
There's a bank that I drove by just like a couple weeks ago, Flagstar. Flagstar. What is Flagstar?
Yeah.
But they're everywhere.
Yeah.
And they have multiple locations. And again, it's so uniquely different. Where again, I just think that the information that you're consuming has to be applicable
Correct.
to what you're, to the playground that you're playing in, right? Yeah. So to your point, are you going to get that 0%, 0% interest free? I doubt that. That's not going to happen.
That's not going to happen.
That's not.
Yeah, and I already know that people are going to be probably, I did it. So it's marketed as zero down or no money out of pocket. Right. But what they'll say is, the business was sold for $500,000. I got 50% financing or 70% financing, and that there was a VTB for the remainder. Technically, that doesn't count, right? And even VTB, so vendor take back mortgages, if someone doesn't understand what that means, right? It's when the seller provides financing because you're not able to come up with the full amount, right? But even with that, banks are scrutinizing them. They're not as common right now because the way the economy is right now, they want to know the borrower has fallback. They want to know they have liquidity just in case.
Would you say now would you say when you set up your business, right? You can obviously have a couple different ways that you can set it up, right? You can either do it as a sole proprietorship or an incorporation, right? Both give you, or a sole proprietorship partnership, correct?
Yeah.
So when you think about what's going to give you the best opportunity where you're not as liable, let's just say, and again, you're going down, something happens, right? And like you said, the banks will try to reap their, whatever they've lent.
Correct.
Does it, in your professional assessment, is it best to open your business as an incorporation? Or a sole proprietorship or a partnership?
Great question. It's actually, it's a lot easier in Canada. It doesn't matter. Because the banks want their money. Corporation, sole proprietorship, it doesn't matter. They're gonna get it. It's not that hard. So all banks now will have some sort of personal guarantee, not to be confused with a lien. But they say, okay, even though, let's say for example, I'm incorporated, right? Let's say it's a numbered company, but they'll just do a corporate title search and say, oh, this corporation is owned by Charles Kiyataba. So it naturally, it doesn't matter. I'm one layer removed, right? I think ultimately, from a risk standpoint, if you're getting lending from the bank, there is always going to be some sort of personal guarantee. Now, in terms of how to properly set up your business, whether it be incorporated or sole prop, I think it depends the industry that you're in, right? That's protecting you from the bank. Now, if you're, let's say, in manufacturing or something that's at the beginning of the supply chain, you're working with a lot of third parties, maybe opening up a corporation can protect you from third parties, right? From coming after you personally, but not the banks. That's a different thing. And then lastly, I would say taxation, right? I think realistically, from a tax level, and again, I'm not an accountant, but roughly I'm decent, but I would say the tax benefits really don't start kicking in until your business is probably making around close to $150,000, $150,000 a year plus. Because then obviously the tax bracket is a little bit different, but sole prop is just fine if it means starting. Now, if you already know that, let's say your business is already trending, and then revenue is not going to be a problem, then don't waste your time. Just open up as a holdco, as a corporation, because you're going to have to do it regardless, right? But I would say industry dependent, and then projected revenue in the first couple of years. If you think that's going to be high, you might as well just don't even bother with a sole prop and just do a incorporation.
So definitely important to know your numbers.
Yeah.
Right? Know that number.
Yeah.
Right? That sounds familiar.
Yeah.
That definitely sounds familiar. You got to know that number. You got to have that number in mind. And again, you can be optimistic on what that number could be, right?
Yeah.
What you project your revenue is going to be.
Right.
And if you fall a little short, okay.
Yeah.
And it could happen. Right?
Exactly.
But you need to have that number.
For sure.
Correct?
For sure.
So when you think about like challenges in securing funding, right? When you think about people, because a lot of businesses, you can have a great business, you can have a great business idea, but the funding it's the backbone, right?
For sure.
Tell us about that. Let us know kind of a little bit of some of the pitfalls, you would say, in securing funding, and kind of how you can kind of navigate around that.
For sure. So again, taking into consideration Canada's way of lending, right? I'm actually surprised. I think a lot of individuals don't realize how little money they need to actually build revenue, depending on the industry that you're in. Now, most of people that look like us are usually at the end of the supply chain. So they're in service-based businesses where you don't have to wait long to get paid, right? You provide a service, you usually get paid right away, whether it be a barber, a restaurant owner, clothing, whatever. You're not waiting 30 days, 60 days, 90 days to receive a payment, right? So whenever you're your business is, let's say, close to the end of the supply chain, or you're doing like financial service, you really don't need that much money. A personal line of credit, 10, 15 grand will do wonders, right? To get the business off the ground, right? Now, Canadian banks like security. So with that being said, now let's say you're doing something a little bit more with more risk. Farming, agriculture, manufacturing, industrial. It's much easier to obtain funding in those things because there's collateral in the equipment. There's collateral in the leaseholds, the build out of that space, right? That is where you'll get Canadian banks financing you. But if you're not there, I would say honestly, managing a healthy personal line of credit, 15, 20,000 is more than enough to get the business operating in the right direction. Now, obviously, we have e-commerce now, which is picking up, people selling online, drop shipping, things like that, right? Again, that's a new business, and I'm starting to see banks starting to adopt those type of businesses on and lending on them. Now you're looking at more so cash flow and revenue. So your ability to show cash flow and revenue over a year or two would help. So I don't know if I apologize. I don't know if I'm going in circles or if I answered your question directly, but I would say you don't go to the bank so early. Really become a tactician and be good at what you do, and you should be able to turn a profit with 10, 15, 20K, depending on the industry that you're in. If you're opening up a grocery store or something like that, that's not going to do anything for you, right? But there's funding for that. That's quite easy to get.
Mm-hmm. No, I no, you answer that spot on. So when I think about, there's different communities.
For sure.
Right? We got to be honest, right?
Yeah.
And if you understand the landscape of what Canada is or has become, there's some communities that it seems like funding is very rampant, Like,
Yeah.
I mean, it is like you can get funding, and next thing you know, it's like, whoa, how did this person acquire 10 18-wheeler trucks in a span of, and they barely just came to the country 6 months ago.
Oh, I can't wait.
So
I can talk about this all day.
So I'm just interested to know, how is this happening in a government that is so strict on the funding, or have now these particular groups created their own funding system? Tap into that. Let me hear this, because that's very. This is a conversation that for me continues to. It's interesting, but also intriguing for me.
For sure.
Because being a person that, again, come from immigrant parents, right?
Yeah.
Been here since 1980. Migrated since 1980.
Yeah.
I see people, again, with all respect to everybody and what they're doing, my hat's off to you, but they just came here like 2 years ago and they are
Up.
The financial funding is up.
Compounds quickly. So share some insight to what maybe I'm missing. For sure. So I'm going to speak this from, man, this should be on blackout actually, but
Well, we're getting there.
I'll speak from my own personal experience, because same thing. So full disclosure, I have 2 other partners, right? Indian, born and raised, right? And so I'm only going to speak on terms of what I've seen and be able to learn from them actually. So those guys are my partners. Those are my bros, right? And obviously me being black, let's be honest, people would say, black people and Indians, they can't do, like, we don't work well together. But I've learned so much. First thing, right? Let's look at Brampton, for example. Brampton in the early 70s and 80s was actually dominated by Italians and Caribbeans. It was not Punjabi or Sikh, led, right? So what happens? So one, there's an extreme amount of togetherness. That's the first thing, the mindset, togetherness. When they come in groves, they all live together, right? And they share resources. That's the first thing that I've saw very, very quickly, all right? 2, they prioritize home ownership. The number one indicator of wealth in Canada, it's still home ownership, right? Because naturally, nothing's going to save you more money than the equity built in your house. You cannot save as much money from your salary in comparison to allowing equity grow in your home, all right? What tends to happen is that's their first place of funding, is their home. Refinance, equity takeout, home equity line of credit, all right? From there, what do? They hire their family. They're not hiring outside to work in the family business. So if the family owns a restaurant, they're not going to hire random people that they don't know. They're going to hire their sons, their brothers, cousins, aunts, and uncles to come work in the family business, understand the family business, and then they expand. They open up a new business, another franchise. But guess where they get the money from? A loan from the initial startup. And then it multiplies that way, so on and so forth. 2, and I'll be open about it. They have contacts within the banking system, within the lending system. I don't care what people say. It always helps to know that you know a commercial account manager at either a VP level or even at branch level, that you can go directly, that you know on a first name basis, right? From an underwriting perspective, from a story creating perspective, it just allows for ease in the approval process when applying for loans and things of that nature, right? And I would say those are probably like the 2 biggest things. Like, I've done so many business loans, particularly for Indian families, and there's even while their kids are in university and they come back home, they're not working for anyone else. They're working in the family business. And if they want to stay, and that builds that entrepreneurial spirit, because they've been working full time and making money since they've been 15, 16, 17 years old within the family business. So now let's say they go away from university, the chances are of them applying for a regular 9-to-5 job is probably not the case. They'll get a loan from the parents and open up the same business that they learned back home into that new city, and it starts branching off, right? So you mentioned trucking business, even though it's taking a beating right now, right? The trucking business, again, that's a family business, right? One person gets a truck, another person gets a truck, all under different credit. And that's how you're able to get more trailers and more fleets on the road. And it all goes back to the same hen, right? I would probably say that partnered up with, again, having a contact of your own cultural descent or background within a lending institution, whether it be amongst the big five, it's an A+. You can't go wrong at that point in time.
Okay.
That's real.
So no, I know you're right, because it's something that I've watched from the sideline, and when you think about our community, one thing is that we will have home ownership, right? The thing is that we don't take advantage of the equity in the home ownership, where other cultures will say, hey, well, if I have 300,000 in equity here, why am I just having my money just sit here? Let me put my money and make my money work for me. So now I take that money out, I do this refi, I go ahead and take this out, and I go ahead and open up a business. Now I'm getting this loan or this refi at a, let's say, whatever percent. Now I open up this business is creating me now an additional stream of revenue. And now what I'm going to do is now take that money and pay off this loan, right? So now I have this X amount of dollars to play with, and now if I have a business entity, I own property, you know what I'm going to do? I'm going to do it all again. And to your point, is that you'll have multiple families at the beginning all living in one home. So now they go ahead and they share the financial burden of that home. Right? So you always see sometimes where you'll see some houses, and you'll see, man, there's a lot of people coming out that house. Like, how many people live in there? It's because they all pool their money together to achieve an overall goal. And I think that's where the biggest difference is in our communities, where we're a little bit behind on the 8 ball when you think about that, right? We rather stand on our own too and not put everybody, all the resources together. And I think that you said it correctly. They pool their resources together. Right? They tap into all potential resources, whether you're an accountant, you know how to do this, you know how to do that. And then also understanding how important relationships are.
Bingo.
Right? Relationships, because what you said is also, I think, very much key, is that people, I don't think they take it for granted how important it is to have certain people in certain places you know by first name and can pick up a phone and call or send an email directly to push that paperwork or push that process through, where it would have taken you 6 months. It now is just taking them 1 month to get through, and it's kind of a smoother sail. Right? And that's how they're able to multiply much faster than the average person, me, you, X, Y, and Z. Right?
No, for sure. Like, I'll even bring up a case. I won't drop any names or anything like that, but I had a case of an individual wanting to open up a barbershop, right? Now, his credit wasn't in line. It didn't show that he didn't show that he made any money on paper, right? So I feared that if it was someone outside of the community, they would just shrug them off. But I understand how much money he used to cut my hair he made. So I didn't. So I was able to actually educate him and be like, hey, listen, this is what you got to do. Give me your Equifax report, all right? You pay all your bills in time. You make money. But it's just the education process. This is what's holding up your credit score. A couple phone bills that you have to go and dispute, right? Make sure you keep your utilization below 30%. We had our credit specialist here a little bit before, right? Less than 6 months later, his credit was above 680. Perfect. Now, I'm gonna show you, you have to show money you have to put money into your business bank account. Unfortunately, this is Canada. I understand you wanna just handle everything in cash. That's not the way it works if you wanna open up your barbershop. Cool. A year of constantly keeping money running through his corporate bank account. He didn't even have a corporation before. So we opened up a corporation. I sent him with an accountant, right? Less than 2 years later, we got him financing. He opened up his first barbershop. Beautiful, right? Now he has other barbers. He has about 5 chairs. And now he's not even cutting as much hair as he was. He's just kind of training and observing. And his goal now is to open up a second barbershop. Now this is the franchise model we're talking about. He already has a loan for the first one, right? He has a relationship with the bank. It's going to be so much easier now to open up another one because the proof of concept's already there. So this is where it's like, because I understand the culture, I understand he does make money. He just needed his hand to be held on the structuring, how to set him up properly to make him look better in the eyes of the bank. And naturally, I helped him with the business plan, the projections and stuff like that, which allowed him to get the funding.
That's dope. See, that's the value. That's really why I wanted to have him on here, because it's like people need to understand there's certain protocols and ways you have to do things. Like, you have to know the game.
Correct.
But that's a big problem in our community too. Like you said, for other communities, they have people in place that can do the hand holding and just push them through and whatever. So that's why it's so important for us to be able to start to build those same type of relationships, to be able to have that same type of advantage or opportunity to do these things.
Yeah, not only just do them, but I think exposing the resources.
For sure.
Because I think we've had people in these industries. The thing about it, we haven't had the platforms and the outlets to expose and share. Remember, this is a city, unfortunately, that doesn't, a lot of times, we don't really propel or we don't promote the people that are educated, that can help, that can open up those doors. We rather, unfortunately, I hate to say it, we rather hate on them.
Yeah.
Right? Charles is out here talking about finance stuff. What's wrong with this guy? Yeah, you know what I'm saying? Like, yo, he doesn't know I'm on road. Like, what are you saying right now? You sound crazy.
He's not getting money.
You know
for
what I'm
real.
saying? He's not getting money. This guy just going to Zara buying these suits. Like, this guy's over here chatting, man. You know what I'm saying? Like, but the real thing is that, a lot of times, you have to be able to look yourself in the mirror and be honest and be like, yeah, maybe I don't know what I'm doing.
Correct.
Maybe I don't have all of the knowledge to get me into or put me in the position to be successful. And that's why, having an understanding of finance, having an understanding of, how to utilize your credit, having relationships. And again, I can't stress it enough. I think relationships it's huge. It's huge. That thing is worth more than the funding. Because the relationships is what's going to get you the funding. And if you don't have those relationships, whether it be with a bank, an individual that can get you that loan or get you the funding, then you're at ground zero. And now it's harder for you, and you're going to get frustrated, and you're going to get you're gonna just feel defeated.
For sure.
And then you're gonna now say, oh, this is not it. Now I'm just gonna go work. I'm gonna go work at whatever Canadian Tire, and my life is not saying nothing wrong with working at Canadian Tire, but you're not going to go ahead and try to put your best forward to be an entrepreneur and take advantages of what this country, why your parents or your grandparents brought you here. And that was to go ahead and take advantage of this life, this Canadian life, right? And all of the benefits that come along with it, whether from a taxing standpoint, whether it be from a business standpoint. Why not, right? Why not?
Yeah, again, I'll even say, like, when I first got into finance, because my background was actually fitness. The last 6 years, that's when I really started tapping into real estate and finance. But I realized, especially now I look, in the majority of the Afro or Caribbean Canadian communities that I work with, man, we have some specialists, we have some tacticians, people who are skilled and are good at what they do, right? So I'm like, why is it, like, I never understood. I was asking my same questions, like, man, like, I don't get why we are not elevating as a people much more than we are, right? Because I can say this with confidence. It's not like the Italian or the Indian is better at what they do. Not the case. I can say that with confidence. That is not the case at all. So, okay, it's not about skill. It's not about us not wanting to work or anything like that. That's BS, right? So, like you said, I think it's perspective. I think we just need to think bigger as a people, and then you hit the nail on the head. Is about the relationship, right? We need individuals on the inside who understand our community, our background. That way we don't get written off so early in the process, right?
Yeah. Yeah.
And actually be wanting to educate, right? And provide that value. That way, over a year or two, you can get yourself set up to now get the correct financing or lending that you need. Because once that person's in, guess what? Who are they going to hire?
Yeah.
Right? Probably someone from our own community. And out of all their hires, maybe one person has an entrepreneurial spirit, is going to ask him, oh man, how did you open up your restaurant? How did you open up your barbershop? And what is he going to do? He's going to lay out the roadmap. And then that's how it starts. Yeah. That's how it starts, right? And it keeps compounding and compounding.
Yeah. It's interesting. Like you always hear people say as like a catchphrase, representation matters. And this is why it matters. Like you said, being where you're from, you're able to identify the needs of the individual groups of people that, someone else at the bank, they're not going to understand that a barber makes 6 figures, even though he's not showing anything on paper, because they don't know that that's not part of their culture. So that's a good point.
I forget what's his name. He's been on EYL, Big America. It's going to come to me. But this is why diversity, equity, inclusion is actually important. Not because of what people think. If you look at a demographic basis, right?
Yeah.
By 2050, they're saying that over 80% of North America is going to be black and brown, or close to it. So you're telling me the economy is going to be over half of the economy. The responsibility of that is going to be coming from black and brown individuals. If those individuals don't have a basic understanding of the free marketplace in the economy, how well will that country do?
Not well at all.
We're going to get done.
Yeah.
China's going to take us out. Russia's going, we're done. So it's actually a necessity for Trudeau, if he's still in power, whoever's going to win the American election, to actually invest in black and brown communities, because we actually are the future of North America.
Yeah, that's a fact.
And we see that all the time. If you think about a lot of these corporations, and it could be, let's just use, I don't know, TELUS and Bell and these things. These companies are creating outlets and funding for our community, right? So it's just a matter of you tapping into it, because they understand exactly what you're saying, how important our community is to their overall success and their growth. And then without tapping into this, and we see it all the time, whether we see it through the music industry, we see it through, whether it be through fashion and all this stuff, they want to tap into our culture, right? Because they understand that our culture creates the biggest demographic, the biggest population, and if we can get them on our side, we're about to see some serious money, right? Because we've now changed that whole narrative, right? So I think what you said as well, it's so critical and so important. It's sharing the resources.
Sharing the resources,
Sharing these resources, right? So you may have people that get into position, right? Okay, for instance, you don't hire somebody from maybe your same culture, whatever, maybe the qualifications, whatever, you can't find someone that's not qualified, whatever the scenario may be. But that doesn't mean that you can't continue to share the resources and educate people through different platforms.
Correct.
And still go ahead and share what you have. And maybe, you can't give a job to X, Y, and Z and every single person from your neighborhood or whatever the case may be. But that shouldn't stop you from not sharing the knowledge and the wealth that you've accumulated that puts you in that position to hopefully inspire and to engage somebody else that hopefully potentially will be the next you one day.
Yeah,
for sure.
Right? So I think that's where hustle, stack, invest, repeat is very different from a lot of the other generational wealth, financial literacy outlets. That's why we tap into people like yourself that will tell it. That are on the ground, that are dealing with people day in, day out, have 1,000+ examples of successful people or people that have nothing, but we're able to take it from 0 to 100.
Yeah.
Right? So I think that's all stuff that is important, and that's how we build the community. right? It's all about the community.
Correct.
It's about how we build the community and how we set that infrastructure. And now let's go ahead and take it up a notch and do what we're supposed to do. Compete with every other nation that's out there. Put Canada, put this city, put every province on that map.
Most definitely.
All right?
Absolutely. No, man, that's where the power is at, man. Is we always talk about the economic power. It's like it's cool to march and advocate and do all these different things, but until there's like an economic strength, that's when you can really start to make changes and dictate what you want things to be and really turn things around. So
1,000%. Like, man, even so, I just got engaged at the beginning of the year.
Oh, congratulations.
Thank you. But my partner, Jamaican, you know?
Okay.
But she used to tell me, all you care about is money. All you care about is money. All you care about, like, I grew up without. So maybe I do, right? But the level of options that having, you know, money in your pocket gives you is super powerful. You get to move at the beat of your own drum. You know what I mean? And I'd rather, like, people. I just feel like people who tell you, "Oh, money isn't everything." I just think they haven't made some. To be honest with you,
Facts.
right?
Facts.
And yeah, although money isn't everything, but I think what you can do if you see it as a tool to empower people, or as your own little soldier to go out and do your own bidding, do what you need to do to grow that wealth, right? Is extremely important. You're right. You can't have a war without financing. You can't do nothing without the right amount of capital, you know, backing you up. Everything costs, right? So I think it's very important to understand how to make it, but then also how to invest and spend it. Hence the, you know, hustle, stack, then you invest it, right? It's right there in the tagline.
Yeah, that's exactly it, man. So again, thank you so much, man. We appreciate it. We appreciate all the knowledge. We appreciate the resources. If you guys don't know, now you know. And again, hustle, stack, invest, repeat.
Yes,
we're out of here.
Beautiful.
Man, thank you so much, bro.
My bad. Was that good?